Welcome everyone to Unit Masters speaker session. We are in cohort 6 of Unit Masters program. This week is the first week. We're speaking about decentralization and the Internet of Value. And today we have with us a very wonderful and well-known global influencer. It's Efi Plyarinou. Efi is based in Switzerland and she's been a thought leader in finance for quite a number of years. She has almost 200,000 followers on different social media channels, in particular on LinkedIn. She is #1 female global finance influencer, as recognized by several different outlets. And besides just being a thought leader and influencer, she's founded a number of initiatives and published a few books which are shaping the way we are seeing the development of finance in today's world. She's here today to share with us her latest insights from attending the last biggest conferences on money and digitalization, and in particular about the topic of how to rethink money today in the era of new internet and commerce. Welcome, Efi. Very excited to have you with us.
Thank you, Yip. I'm very excited to be with you. Thank you for the invitation. I wish I could say hello to everybody by name, but obviously I can't. As Yip said, I'm based out of Switzerland, so I bring you the energy and the vibe from Crypto Valley, which is definitely one of the top, if not the top, hub in terms of blockchain, and blockchain not only for finance, blockchain for Web 3.0. And also, as you mentioned, Yip, I had the joy to be at Money 2020 just last week in Amsterdam. Money 2020, for those that are not in the fintech space, was pre-COVID the biggest event, either in the US and then in Europe. In the US always in LA, and in Europe always in Amsterdam. And this time it was downsized, so it was only 5,000 physical people versus usually 15,000. 3 days there, and I'll definitely share a lot of insights, since a lot of the topics that were discussed do relate to digital assets and blockchain. I'll share with you insights and thoughts, and obviously I love to interact with you afterwards, and invite you to link with me. I create a lot of content. I write blogs. My repository is on Medium. I do talks, more formal ones, and more sort of live ones also on YouTube. Sometimes I go wild on TikTok and so on. So let me start sharing. I'd like to take you a little bit on a journey, since my background is from Wall Street. I started my career on Wall Street in the 90s, when innovation was really happening in finance there. And the last 7 years, I'm focused on fintech. Fintech is anything to do with innovation around financial services. Of course, blockchain is one of the major technologies that are reshaping financial services. My journey and my sort of caught my eye because a couple of years ago, it became clear to me that this is the technology that will disrupt capital markets. So I was thinking from that angle. Capital markets meaning the settlement of securities, be it equities, be it the mutual funds that you invest in, and so on. So on rethinking money, if I take a pulse today of where we are at, we need to be looking, first of all, to the East, China, basically, because that is where it's the most advanced society, cashless, if you want, society. It's where QR codes for payments were born and super apps where you pay for anything from food delivery to transportation, to your bills, anything that you want within those ecosystems. So that is sort of where new business models were born for money. And then also we need to remember that in emerging markets, especially like Africa, we had the birth and the scaling of mobile-only payments like M-Pesa. And then in the developed world, where I live and work, basically COVID moved us forward, and we've seen contactless payments growing. I just want to share with you some recent figures. Over the past year, we've seen 50% rise in contactless payments to the order of $2.5 trillion being processed through contactless payments. And the other noteworthy boom is the boom in the stablecoin market that is related, of course, to blockchain, although the stable coins in the developed world are backed by fiat, mainly the US dollar for the moment. And we're talking about a market that grew over 300% year on year and is now around 120 billion, give or take. So this gives you a pulse of where we are in payments. And why do I say payments? Payments have been sort of core in economic activity. And no matter what happens with blockchain, with money, with decentralization, payments will remain core in the economy. So it's important to look at them. But on the other hand, we need to realize that the innovation that has happened up to now, what I mentioned before, QR codes, mobile money like M-Pesa and others, or the contactless payments in our world, they're all about new ways of accessing money or distributing money. And don't get me wrong, I don't want to undermine this, but we need to understand that up to now, all the innovation, 99% of innovation that has happened up to now, be it around open banking, APIs, and so on, is more about new ways of accessing financial services. And I can add to that, the way, how easy is it to access loans? And again, I like to think of China and Ant Financial that has invented the 310 lending model, which means that it takes 3 minutes to make an application for a loan, 1 minute to get approved, and zero human touch. So you see how money is, the way we access money is changing, right? So to this, I want to bring you to blockchain and how blockchain comes in, and you all know that the sort of headline idea of Bitcoin, the peer-to-peer network, and so on. And a lot of people have been asking the classic question of, okay, so why should we care? We do have peer-to-peer networks, even in the fiat world through Fintech, so why should we care? And there's multiple answers, and only through looking at what kind of locked value or what kind of services that were not possible before can be unlocked through blockchain. Only through that can we understand the potential that is there for us to tap in. So again, the pulse of the market right now, what we have is mainly, after 12 years, we've got this exponential growth in stable coins. Clearly, these are peer-to-peer markets that you can access 24/7, and you don't need necessarily an intermediary. And then you have the growth of decentralized finance and all the staking that I'll touch upon more. And this is changing not the way you can access only money, but the way money is manufactured. This is very important to realize. First of all, suddenly we have the possibility that private entities can issue money versus central banks. And second, we have the possibility that these private entities, be it new corporations or existing businesses, can issue programmable money or tokens that have all sorts of hybrid capabilities. And this is extremely exciting. So I'm going to walk you through some of the ideas that are possible and are out there already, because some of them are going to reshape the way retail people like you and I as individuals shop and process our everyday economic activities, which are really the usual consumer banking, if you want, activities of paying bills, paying our rent, getting a mortgage, shopping, and so on. But also there's a potential to disrupt at a different level, at the business level. So how small or medium or big businesses along the supply chain, how they interact between them, and also at the capital markets level, how companies raise capital, how investment products are issued, traded, and settled. So this is extremely exciting because, in my mind, there's these three major levels that I just mentioned to you: the consumer level, the business level, and then the capital markets level, that can be disrupted through blockchain, and has a lot to do with how capital money is manufactured. And as I said, I'll go through several examples around this. We can think of tokens in systems that program loyalty. We can think of tokens, and I use the word tokens because to me, cryptocurrencies are quite confusing and an umbrella term. So I wouldn't call stable coins cryptocurrencies. I wouldn't call certain utility tokens cryptocurrencies. So I feel that the token term is a better term to talk about these programmable tokens that can be transferred peer-to-peer between people, between businesses, and also between machines. So let me, maybe I should share a slide here with you. If I can manage to Okay, I think I can. Let me know that you can see the slide.
Yes, we're seeing it.
Okay. So again, when we think about money today, we are in this world of open banking and APIs that are enabling all sorts of integrations and invisible ways of payments and customer experiences through entities that are not financial service entities. It might be an e-commerce site or some other payment site, and money is flowing. So already there, we have a lot of innovation, but it is at the access point. And then if we look at the innovation that already is here through blockchain and distributed ledger, it's basically private stable coins like Tether and USDC and DAI and so on, but also central bank digital currencies. Those two are already here. And with the CBDCs, there's over 80 projects in the pipeline, and I suggest to you, if you want, there's a great visual tracker of global CBDC projects, and they're staged by the big think tank, the Atlantic Council. And there you'll see that already we have 2 live ones, one from the Bahamas and one from the Eastern Caribbean. Of course, those are small countries, but now we are all awaiting for the digital yuan, which is China's digital CBDC that has been piloted in specific cities and for specific purposes. And if you look at how the piloting has been done, these are great examples of programmable money, because they're able to put out airdrop a digital yuan for only a specific purpose, for example, to be used for transportation for public employees, and only with a certain expiration date. So you see how CBDCs can enable to airdrop money for specific needs when they're needed. And we all know, especially through COVID, how valuable this is. Now, in terms of the potential here, there's many different areas where tokens can create and unlock a lot of value and create new business models. So loyalty rewards within ecosystems is one area where it's easy to imagine how tokens can be used within large ecosystems, or to reward early users or adopters. And we already see that in the DeFi world, in the decentralized finance world, where a lot of the protocols there, or the dApps rather, are rewarding their users with tokens the more they use the services. We're also seeing very nice projects that are for good, if you like, around universal basic income. And there again, there's specific issuance of tokens for specific periods. South Korea has deployed the universal basic income scheme during COVID. Spain did. We have a couple of municipalities in the US that have launched UBI schemes and are considering to sort of continue them in specific sectors for example, for teachers. Other applications are tokens for machine-to-machine exchanges that have not been used yet so much, but there's a lot of potential, especially in the industrialization or the scaling of the Internet of Things, where machines will be talking to machines and supply chain will be seamless. I've seen a couple of examples of tokens that have been tested in capital markets. We have blockchain use cases to settle securities, especially in the private markets, using blockchain and smart contracts to be able to transparently and securely issue and settle and through their life manage cash flows, coupons, and so on through distributed ledger. And another major use case that I love has to do with tokens to issue mutual business credit. So imagine an ecosystem of businesses of various sizes, and instead of having a central entity that issues loans and is the intermediary to borrow and lend like we're used to, or to do the usual model of over collateralizing assets to borrow. Here we can create an ecosystem, a marketplace of businesses that exchange credit between them, and the token is the way this exchange is done. If you think of this, this is the next generation of a barter economy, but with digital tokens. And there's many more examples that I can share with you. Just before joining you today, earlier, I was listening to the fantastic story of an entrepreneur and founder of Paxful. Paxful is an African crypto business. If you look at the website, that's what you would understand. You would just think that, okay, here's another way to buy and sell and trade Bitcoin or crypto. But really what they're doing is they're enabling people in countries like Nigeria that has capital controls, and you can't, if you want to buy something online or offline outside the country, you really can't do that. So Bitcoin can be used as a peer-to-peer token, if you want, to circumvent this problem. So it's all about using tokens to solve real problems. Here, I'm not talking to you today about the potential of cryptocurrencies as an investment. I'm discussing the possibilities of rethinking what money is. Money is to facilitate economic activity, whether it's issued by central banks, whether it's issued by private entities as stable coins, or other, it's native to blockchains and the use cases, tokens to facilitate how machines talk to each other, or how people that can't do cross-border micropayments, or capital markets, cross-border settlements. It doesn't matter. We're talking about solving problems efficiently. Let me stop this stop the slide and take a breather. I hope I'm not talking too fast for you. What I want to jump to from these thoughts that I'm sharing with you is if you look at where we are today, you see a cryptocurrency market with a market cap around 2 trillion. And again, this is all about looking at it from the investment angle. I invite you to look at it from from the angle of what is the adoption, what are the real practical use cases, and how do these also relate to the evolution of the next generation of the internet, the Web 3.0 that is underway. So there I want to share with you again some examples that highlight this aspect rather than the investment aspect. And again, I will share my screen. So if you look at the recent announcement by Twitter that they will offer these services called tips, which enables whoever wants to tip Twitter users with Bitcoin, or for that matter, to link with any wallet and tip. So this is an example of the potential of taking the business model that social media are based on, which is 100% an advertising business model, and change it to a business model in which creators are monetizing their creation. And of course, this is a very small step, but it shows you the direction that we are going. And it also opens the possibility of all these micropayments, real time, 24/7 on the internet for content, and peer-to-peer also. So if I see something that I like, I can imagine the next generation of the web that I can pay for it. I can tip it. Another example is Backed, the wallet that Backed has created. Backed is an app. It's relatively, I would call it a startup, although it's a publicly traded. It's a company that the New York Stock Exchange has launched, and it looks like a wallet where you can put your crypto, but in that wallet, you can also add fiat, you can put gift and reward cards, and you can also hold your tokens from games. So here we are seeing the first sort of version, if you want, of a wallet that is trying to build bridges between all the worlds. What are the worlds? The worlds are the physical world of cash. We all have an account, although it's just an accounting, if you want, in our e-banking of our fiat holdings, but this can also hold cryptocurrencies. It can also hold rewards and tokens from the gaming world. And why do I say that? It's important to realize, even for us coming from the traditional world, that the virtual world of esports, of gaming is growing, and the tokens from that world are a serious economy, much bigger than the, for example, physical sports economy. So Web 3.0 definitely needs to be able to integrate these worlds. Another example of, these early aspects of Web.3 that are enabled through blockchain and cryptocurrencies is the example of staking for good. And first of all, staking in itself is a major innovation in money, because staking, think of it, is the next generation of a savings account. You earn interest in a world that is so hungry for yield. It is 24/7 and 100% liquid. So that is a major innovation enabled by blockchain and blockchain protocols and DeFi. Now, staking for good is a great example. And I urge you to look at this Good Dollar project that was seeded by eToro, but there's others that have seeded it. And basically, this is not about donations, donating your crypto to give it to people that are in need. It's about staking your crypto and giving that interest to people that need it, either in a UBI form or in a donation form. And again, transparency and so on, and combining these two aspects. You all know, obviously, about the stable coin that the ex-Libra, now Diem Association is preparing. And that stable coin, to me, when it comes live, is a great example of how the intersection of commerce and social networks and native tokens will unlock a lot of value that today is not possible. And along those lines, and you see the tendencies in the market, Revolut, the app that I assume a lot of you have heard or are using in the developed world, has announced that they are looking to get approval to launch a utility token. They're looking for approval from the FCA, the regulator in the UK. We're not clear what exactly utility token this will be. Will it reward its users for, crypto, their activities in the crypto exchange or across the various services on Revolut? But again, it shows you where we are heading. If you allow me, I will take a sip of water, and I will share with you some insights. And that's the last part of what I want to share with you, and I'd love to hear your thoughts and reactions. I hope, Yip, I'm over time, right?
You're totally fine, Efi.
Okay.
Take your time. It's super, fascinating to hear.
The last part that I want to talk to you about, and this is very fresh insights and thoughts, again, from making associations and connections, being 3 days at Money 2020 and hearing a lot about what's going on in the payments world, how we still have a very fragmented world with many rails, with different geographies being used to different ways of payments. We in the developed world use a lot of credit cards. That's not the case in Africa and in the Southeast Asia and other countries. How merchants and payment companies should continue servicing customers and offering them whatever means of payments they like is of their choice. So basically serving the customer. And, listening to what the thinking of commerce giants or big retail giants are, it's becoming more clear to me that a lot of innovation is going to come from the big retailers. They are in a great position to unlock the value that we expect to be unlocked through the internet of value. Why? Because they are at the convergence of the physical world. They're selling things, think of Amazon that is selling, anything from books, clothes, electronics, whatever. Think of IKEA that's selling, furniture and so on. They are in that world. They're also in the digital world very often because they sell subscriptions, they sell music, they sell video, they sell digital services, and they are in a position to also integrate the metaverse, which is just emerging. And all this, of course, is tied with payments. Therefore, for me, this peer-to-peer exchange between merchants and consumers is very natural to evolve through the commerce business. So I expect to see a lot of innovation there from the big retailers, and then it will trickle down to the smaller or medium-sized retailers. And to give you an example of that, I want to share with you what IKEA is doing, because Amazon, is huge. They have cloud services, they have all sorts of digital services, but also physical services. To me, it makes sense for Amazon to unlock a lot of value by creating shopping experiences through tokens that will keep the customers really within their ecosystem and really unlock value and new business models. But if I bring you the example of IKEA, which is obviously they're not offering anything digital, they're just offering, physical commerce, but they are also starting to look at how you can walk in the store, start your shopping experience, and then continue that shopping experience online, or vice versa. Begin online and then go and continue in the store in a seamless way. And also they're looking at, if you shop online or in the physical store or in this hybrid session that I spoke about before, if you go and pick up your cart, your shopping cart, whatever you've decided to buy, not from the IKEA store, but from where they have the inventory, then you will be rewarded. They're already working on that. So that, look at it. We're talking really about an idea where this has not only environmental impact, it's a way that the customer can give, it's selling services and value back to the merchant, because the merchant is not only benefiting from reducing their CO2 emissions, but also labor costs and consumer space. So this kind of exchange is going to become, seamless through tokens. And I see much more of that. I see Square, for example, as a great a case where they can streamline with tokens affiliate marketing. The other day they announced that they're linking Square merchants to TikTok so they can sell on that platform. Now, through crypto rails, they could do a seamless affiliate marketing business there, and again, reduce their dependence on ads and everything. And the last part that I want to mention, and I'll stop here, is the fact that we're seeing also luxury brands taking advantage of blockchain technology for the authentication of their products, but they're also using it for gamification of shopping experiences. So all in all, there's so much potential here. And before closing, I want to share with you what my thinking is going forward. I really think that big retailers are going to push the envelope of what money is. They're going to use blockchain technology to unlock value within their own ecosystem. They're going to create new shopping experiences, and they're going to shape Web 0.3 because they're at this convergence of the physical, the online world, and the metaverse, and they'll build the first bridges. And on that note, I will stop.
Efi, let's clap your hands for you. You are super wonderful. Thank you very much for bringing the latest insights also from the Money 2020. I want to kick off and ask some questions from the audience, but maybe first, what is actually, for yourself most exciting? What are you actually wanting to see in the next, let's say, 4 years, and then maybe in the next 15 years?
I want to see these hybrid business models that combine, new business models, profits, but with the purpose. So for me, this is the big excitement. What I grew up, or I was nurtured in, was a world of only financial profits. Those were the metrics. Here we have the possibility to design a world that is hybrid and has the best of both worlds. What the French called the choix du roi. They refer to, when you have a boy and a girl, that's like the best of the worlds. So the best of the worlds in the economy is profit and purpose, good for all of us. And when I say all of us, it can be sometimes it can be the environment and the economy. It can be empowering people that need economic empowerment, and so on. So always sort of the balance of purpose and profit.
Wonderful. So let's maybe ask question from Mayank in the chat. He asked, Efi, want to follow up on CBDC. Is that something you think we should embrace, or something we should actually be scared of? How would you think about it?
I mean, it depends where where you're at, in what economy you're at. CBDCs are going to be designed with different purposes. So, for example, it is clear what the central bank digital currency for China wants to attain. They're very clear on that. They want to enable anyone, anywhere, at any time to be able to engage with economic activity. And that makes sense for the Chinese economy. On the other hand, if you look at the thinking of those that are involved in designing, if you want, or thinking about what is appropriate for England or for out of Germany, the thinking and so on, it's completely different. It's all about wholesale central bank digital currencies and how we can improve the way banks talk to each other. So first of all, central bank digital currencies doesn't mean that it's necessarily retail. Maybe we will never see a retail central bank digital currency. Maybe we will. So I don't think the right question is, are these good or are they bad? You know, the thinking, the evil thinking of they are surveillance tools, I don't buy into that, because we already live in a world where our privacy is not as how can I say, it's not as protected as we think. I would be more concerned for cybersecurity issues around the world in general right now, both for the banking sector, but also in general, rather than what are the issues with CBDCs. I'm very open, and I think the fact that the developed world is taking its time to think through this is a good thing, and I applaud the fact that they're not sort of giving in to this geopolitical pressure through the media of, oh, you know, China is in advance and we are behind. These things need we need to take time to think through them.
Yeah. We had another question from Aditya. It was about DeFi. I guess referring to, you know, DeFi being the promise of financial inclusion, but what is actually the risk within the DeFi? What should people be aware of, and what do you think, like, you know, it needs to be taken into place so that DeFi can be implemented in a way that is not harmful for entire society and societal systems?
Well, again, look, there isn't one answer here. DeFi is a whole sector with thousands now of initiatives or dApps. Like with any startup ecosystem, there are going to be failures and there are going to be scams. So we always need to be careful of scams. Like in any startup ecosystem, and there will be major failures too. Let's not forget that these are open source technologies, and therefore there are a lot of unknowns. What is important here is that we do have already something that is innovative. So it's, to my mind, it's not a question of whether there is a need and whether we have created something that is new and valuable. How we are going to use it and scale it, that is the question. Will it be regulated in a way of retrofitting existing regulations and use it that way within existing financial institutions, or will it reside outside the so-called regulated system? It's yet to be seen. One thing is important to realize is If you look at fintech, let's say that fintech formally started 10 years ago, right? And of course, then the narrative was that if you're not regulated, you can't offer financial services. And that's why a lot of banks and financial institutions felt comfortable and complacent and so on. Fast forward to today, and what has happened is we have many grown-up, scale-up fintechs that are not financial institutions regulated with the classic sense, but have new licenses, of narrower scope, and are offering financial services. Plus, we have all these financial services as a service, and they are, we find them on non-financial entities. So this could be also the path that DeFi takes, but it's going to take time, and we don't know how regulators are going to treat them. Plus, surely not every jurisdiction is going to treat them the same way. We already have differences, even for stable coins and for crypto and so on. So a step at a time, and pick your jurisdictions and where you place your money, so to speak.
Okay, Mary says you are a rock of sense. I just wanted to read it out because it's actually a super nice thing to say. Okay, I want to give the word to Saurabh, and I will ask you to unmute. Please keep the question concise.
Sure. Thank you so much for giving me this opportunity, and thank you so much. It was such a great presentation, and there's so much I've learned from your session. My quick question to you would be, since I would like to go back to the previous question of CBDCs, and of course you said that CBDCs are you have to see in different contexts, whether it's digital yuan or any other CBDC that is coming up with the digital version of it. My question to you is that Nigeria, I think they will be launching it by in the first week of October, and they've already gone online. And since you talked about that, developing countries are taking their own sweet time and understanding the process behind it, although China's way ahead and they have already launched their digital yuan. So Nigeria, being the first country in Africa, wherein they are addressing so many challenges, maybe cross-border payment and stuff like that. So if they are coming up with e-Nira, so why I think they should also jump on the bandwagon and maybe just do test it by just launching it. So my question to you would be, like, massive economies like India, should they be jumping on the bandwagon and make use of this opportunity and just see that how it works, maybe for good or bad?
Well, first of all, it is not a given that because a central bank issues a central bank digital currency, that this will be adopted and used in the economy. Plus, the central bank will have to decide what is the balance between this central bank digital currency and the physical currency and their monetary policy. It is not as evident as it may seem that it will be adopted. Again, in the case of China, for example, they are clear on what they want to enable. This is not the case in Nigeria. The economic problems are completely different. They have huge inflation. There is no trust to the currency, and people are struggling, if you want, to accumulate foreign currency, and the government, if you want, the central bank wants to keep foreign currency for its own purposes. So we have a completely different set of an economic structure and problems than any other country. So it's not clear how in Nigeria, for example, a digital naira will help them solve their problems. And I say this because they will have to solve the problem of interoperability with other countries. Okay, let's say they launch it tomorrow and everybody's using it in Nigeria. How is that going to help them to send money to other African countries cross-border? Who's going to take care of the rails that are needed for that interoperability? From what I understand, in Africa right now, there are 2,000 payment providers, mobile payment providers, but only 3% speak to each other. So unless a CBDC solves the problem of interoperability, I don't know that it will solve the problem of cross-border payments. And this is, I'm not a specialist, neither in Africa, but you see, it doesn't mean that the CBDC is magic for whatever problem it's supposed to solve. I don't know if I answered your question, but this is my thinking for Nigeria specifically.
Yeah, thank you so much, Efi. I guess this is a great reminder to always focus on what is the problem that we actually want to solve at hand, and then see how we can use technology and not the other way around. All right, everyone. So first, thank you very much, Efi. I think we move now into a few minutes just of breakout rooms so that everybody has a chance to meet each other real quick and know where you're from, and also ask each other the questions of where you stand in terms of learnings for the first week of Unit Masters, and we come together for a closing 5 minutes only of breakout rooms. I'll click it open and then see you again in a few minutes.